Welcome, guys, to the morning meeting, the ARMR Report morning meeting. I'm Brett Rosenthal, your host, also your fund manager. I manage my own assets and that of investors through our affiliation with Interactive Brokers. And so what I'm going to be doing is basically a 5-minute course on how to get your trading day started every day. I'm just going to do it every day. I'm going to come on like this. I'm going to tell you what I'm looking at on my trading desk, what we're focusing on, and how we're trying to get our mind right to make sure we make the right investments and the right trades at the start of the day and throughout the day. And then, as usual, I'll be back at 12 o'clock for our half-an-hour special ARMR Report, where we really go over bigger issues of the day. So let me start by saying, I'm just going to give you some thoughts on how I get my day started and things that are in the news that I think are important or not important. At 12 o'clock, I'll go over the positions of our algorithms and what it means for how we're adding or subtracting risk. Those of you who follow the ARMR Report know what I'm talking about. The rest of you guys, you can go look at the YouTube channel and see some of our playlists. You'll get an idea of what we're doing. So I want to start by telling you that I think the single most important thing to do, whether you're trading on a intraday basis or you're looking to develop your investment portfolio in stock market, is to always remember the most important part of the investing trading process. If you were to ask me, and I've been doing this over 30 years, so I'm going to try to share with you knowledge that I've learned and I've bled for and I've fought for. It's not easy. Okay? You got to work at it, particularly if you're going to be trading on an intraday basis. And if you're investing over a longer term, you have to somehow divorce yourself from the propaganda that's been stuffed into your head since college courses on how to invest. Constantly buying things and then holding them for the long term, while it sounds good, really is not effective as a way to manage your capital, because it seems like statistically every decade there's a period where the whole market drops 50%. And so depending on where you are in your retirement cycle, the closer you get to retirement, the less sense it makes to say, I'm going to be diversified and I'm going to go out there and just buy and hold things forever. Because then you wake up in the middle of 2008 and you don't know what happened to your savings. And so you have to avoid that. And by the way, diversification is not the answer to avoiding that. In the world we live in today, I like to say on the ARMR Report, this is a millennial stock market. Since 2008, things have changed in a major way. Two things. One, central banks are more than happy to step in and manipulate the markets. And so it makes it much more difficult to deal with the swings, because you never know when central banks are going to just start buying the market and they have an unlimited amount of supply. But then when they stop doing that, the volatility is so fierce, it catches a lot of people off guard. But the other thing that the millennial market has is the advent and acceleration of trading based on algorithms. Algorithms dominate 85, 90% of all trades that are done on a daily basis and on a multi-day basis. Algorithms are used in all types of investing processes. And that's why I've started this show for you. We have our own proprietary algorithms, and so I'm trying to make them accessible to you in a way that's easier to understand. A lot of people like to talk about algorithms like you need an MIT degree to figure out. You don't. This is about probability and statistics. So this what gets to the crux of the issue for me. Every day I come in before the trading day starts, I remember my mantra, if you will. The most important piece of information. What do I use to make my decisions, whether it's day trading or multi-day trading, or investing over the long term? You have all this information coming through a funnel. And at the bottom of that funnel, there has to be a decision-making trigger. What is it? I've prepared a list for you on our website. You can go to rosenthalcapital.com and you can look at algorithmic research, and you'll see a blog that I'm continually updating where I'm building a list for you of investing rules of the road from 30 years of doing this. The number one rule, whether I'm trading or investing, is when I've thought it through, I've thought everything through, and now I'm ready to hit that button and make an order or an investment. I ask myself, am I on the right side of probability and statistics? And is the reward worth the risk? That's it. That's it, guys. That's all you have to do. Now, the hard part there is figuring out, are you on the right side of probabilities? We use algorithms for that. And then being honest with yourself when you look at the reward versus the risk and using algorithms to help you determine that. So no matter what I do today, and it's a flat open, okay? So we had a big up day on Friday, huge down day on Thursday. So we're getting a lot of volatility. We're still risk off on our desk right now. And so that means we're focusing on day trading. And I need an extended move in one direction or the other with a volume spike that gets me to look for the reversal trade. That's the only trade I'm putting on in a market like this. Okay? So flat open, I have nothing to do. The market extends higher or lower to a significant enough degree. I use algorithms to determine that. And I get a volume move in that direction. I look for a reversal of that volume move. So if the market sells off 1% plus, let's say in the morning on the S&P, then plunges lower on volume, if we take out the high of that volume bar, we look to get long. That's our money trade in a volatile bear market, which is what we're in right now. I'll go over more of that at 12 o'clock. I hope to see you guys there. Thanks for joining me today, and try to focus on this one issue. Make it simple. Don't overtax yourself. After you've done your research and you've done your work, before you invest or trade, ask yourself these two questions. And if the answer's cloudy in any way, then don't trade it and look for a better opportunity. All right? That's my gift to you today. Good luck out there, guys. Be safe. I'll talk to you at 12.